In July 2026, the landscape of the semiconductor market shifts as SK Hynix lists American depository receipts on the Nasdaq. Trading under the ticker SKHY, the company aims to raise roughly $29.6 billion. For years, U.S. investors looking for a pure-play memory manufacturer on domestic exchanges were largely limited to Micron technology. This chart shows the historical price-to-earnings multiples for memory manufacturers. Because it was the only major local option, Micron traded at a 35% scarcity premium compared to SK Hynix shares in Seoul. Now that SK Hynix is directly accessible to American capital, investors are likely to rotate their holdings, which threatens to compress that historical valuation gap. This shift is driven by a search for direct exposure to the primary memory supplier for the current AI cycle. With the arrival of SKHY, Micron is no longer the default choice for U.S. portfolios. Its merits must now be measured against its largest global rival. The rivalry is centered on high-bandwidth memory, or HBM. This specific hardware acts as the critical bottleneck for the entire AI data center infrastructure. By mid-2026, SK Hynix holds a dominant 60% of the global HBM market. Micron follows as the primary U.S. challenger, with roughly 21%. Despite the difference in size, both companies have their entire HBM production capacity already sold out through 2026. Because current production is fully committed, investors cannot differentiate these companies based on available inventory. The choice between them depends on which engineering solution, SK Hynix's thermal packaging or Micron's power efficiency, becomes the standard for next-generation AI chips. SK Hynix established its lead by securing the majority of NVIDIA's supply relationships early in the AI cycle. Their technical advantage is focused in the thermal efficiency quadrant, relying on a proprietary process called MRMUF. As memory chips are stacked 16 layers high, they generate massive thermal energy. MRMUF allows the hardware to stabilize and disperse heat. This thermal management is why SK Hynix is projected to supply up to 70% of the HBM4 memory for NVIDIA's upcoming Rubin platform. Micron took a different route, using their 1-beta DRAM process to skip the HBM3 rollout and move straight to an advanced version of HBM3E. Micron's primary metric is power efficiency, claiming a 20% reduction in power consumption compared to the industry baseline. They are pairing that efficiency with speed, shipping HBM4 chips capable of moving over 2.8 terabytes per second. While SK Hynix provides the thermal architecture for NVIDIA's scale, Micron targets hyperscalers who are limited by the physical power constraints of their data centers. The $29.6 billion raised in the Nasdaq IPO allows SK Hynix to fund a massive expansion of its physical production facilities. This capital will be used to purchase extreme ultraviolet lithography machines from ASML, which are required to manufacture advanced AI memory. $4 billion is already allocated to a new advanced packaging facility in Indiana, placing SK Hynix production directly inside the United States. This expansion comes as Micron struggles with a supply bottleneck. The company currently fulfills only 50 to 66% of its HBM customer demand. As shown in this capital expenditure graph, the spending spike from SK Hynix puts immediate pressure on Micron to increase its own investment just to protect its 21% market share. SK Hynix is using its IPO to secure a lead in future capacity, forcing Micron to choose between aggressive spending and potential market share loss. Micron maintains a unique advantage as the only major producer of high-bandwidth memory based in the United States. This domestic identity aligns with current geopolitical efforts to onshore critical semiconductor manufacturing. Major data center operators are actively diversifying their supply lines to reduce their dependence on manufacturing hubs in South Korea. This need for a second source of supply practically guarantees Micron a role in the long-term infrastructure plans of U.S. tech giants. This geopolitical positioning provides Micron with a layer of downside protection, helping the company secure multi-year contracts regardless of its rival's scale. Investors should expect some short-term volatility as institutional portfolios rebalance their holdings to accommodate the new SK Hynix shares. However, this waterfall chart shows why analysts view the listing as a positive event for the memory sector as a whole. As SK Hynix enters major U.S. indices like the SOX, it will attract automatic passive fund flows, lifting the baseline valuation for all memory manufacturers. A $29.6 billion IPO dedicated to AI memory expansion validates the scale of the ongoing infrastructure build-out. The increased institutional attention on the sector is likely to support Micron's valuation, even as it loses its status as the only local pure-play option. This guide breaks down the choice between the two companies based on different investment priorities. SK Hynix is the choice for those prioritizing proven manufacturing scale and the thermal management necessary for NVIDIA's roadmap. Micron is the choice for those who believe data center power limits and U.S. supply chain security will define the next 5 years. Both companies are entering the next cycle with fully sold-out order books, which makes them both viable options in a high-demand market. Success in this sector depends on correctly identifying which of these technical and geopolitical trade-offs will dominate the AI data center market.